Hey there, welcome to the My Risk Advisor podcast. This podcast is for anyone in the financial planning ecosystem with a focus on life risk insurance. I'm your host, Phil Thompson, Director and Financial Advisor at Sky Wealth, and I've been on a business journey over the last few years going from a struggling holistic advice firm with one staff member, considering packing it all in, to pivot the business now to being one of Australia's leading specialist insurance advice firms with over 7 advisors, 30 team members, and helping hundreds of clients every single year get important insurance cover in place. I am unashamed to say that this podcast is so I can continue to grow and develop as an advisor and a business owner as I interview some incredibly smart individuals. So keep on listening so you can learn alongside me. All right, today I've got Rob Vitnell, who is the Managing Director of AFRM. Thanks for coming on, Rob.
Thanks for having me.
To start off, I just want to ask and understand your journey in advice. How did you get into advice? Why did you choose risk-only advice? Help me understand your journey.
Well, I can assure you I didn't wake up one morning deciding to be a risk advisor. There was a long and winding journey to get to this point. Started with a commerce degree at university and then some graduate positions, ended up in an accounting and financial planning business. And then the risk, I was doing sort of broad-based advice, paraplanning, got into advising, and then the risk advice role came up in that practice. There was a vacancy. And so I was asked about it and I didn't know really anything about insurance. And I thought, well, this is a good opportunity to build my career in an advice role, to specialise. And so I took on that position, and that was sort of in the early mid-2000s. Then got approached by the founding directors of AFRM a few years later. We'd sort of come across each other at industry events, and they said, well, maybe you should come and work for AFRM because, we're a specialist risk practice. We've got a team of people that do nothing but risk. It'd be a great place for you to learn and grow and develop your career. And so that would have been, I think, 2007. I came across to AFRM, and now I'm running the company some 15 years later, still here, still kicking along, and plying my trade and trying to do a great job in the risk space.
Cool. And, was there any concern when you moved into that risk advice role, pigeonholing yourself into insurance?
There was. And I remember at the time thinking, am I just pushing myself into that old sort of AMP life agent type space of sales, essentially, just flogging life insurance product. And that's sort of just that initial fear and not really understanding what it's all about. And I think once, I dipped my toes in the water and really started to understand there's a lot more to it than I first realized. And then coming across claims, really, the light bulb moment was dealing with people in a time of need and really understanding the need for specialist advice and, to delve deeply into it as a specialist area of expertise to get claims paid. That's when it was like, well, I love what I do. I love helping people, and there's a lot to learn, and there's way more to it than you would know on the surface, I suppose.
Yeah, and I think that's something that we talk about when we're recruiting, new people to the industry or pre-advisors. A lot of their concerns is, well, do I want to go to a risk-only firm? Risk is kind of the ugly cousin of the advice world. Yep. So how do you manage communicating that to new entrants?
Well, I've been recruiting some people recently. I've brought in some new paraplanners into the business, and I find that my strategy now is almost to convince them not to start with me. It's like I give them lots of good reasons why you wouldn't want to join our business, I suppose. And it's almost like a bit of reverse psychology to say, well, there is a big bad world out there and you could go and do anything you wanted to. It doesn't have to be risk, but you've really got to want to do it. And once you get into it, there's just a lot to learn. There are lots of career opportunities. In our business, we have, different streams of career opportunity. We have the administration space. We have administrators in here that are real expertise in terms of insurance and in doing applications, helping with claims advocacy. There's a real career path just in that space alone. And then, of course, we've got the advice space where we quite often bring people through paraplanning into the associate role and then into advising. And we have different streams of advisors. We have existing business advisors, new business advisors. And then, of course, we've built a whole career path around claims advocacy now. So it's not just a very, very simplistic, narrow focus. Although it is a specialist role, there are lots of different areas that we can go into. And in fact, we've also got compliance people in our business. So, you've got that side of the business as well. So, yeah, sure, it's not as sexy as the, our investment cousins over, in the broad-based world, but there's certainly a lot to be achieved in the risk space.
Yeah. And the good thing about, or the bad thing about risk is we sell the bill every year. Here's the invoice that you need to pay every year to have this cover. The upside is in investment space, you talk about an investment return of 9%, it's 2% above market, great. And you could put that in dollar terms to the client. Okay, we increase your wealth by X amount. But on the risk side, you get to say, hey, now here's last week, one of our team members got a trauma claim of $240,000. She was sitting behind me when she got the email that it was getting paid out. And she recorded a video of telling her husband, hey, we've cleared the mortgage. So like the risk side, you get that massive upside of those claims that you talk about that is so powerful when you're talking to clients.
Yeah, I agree with your comments. I think nobody really wakes up in the morning and says, I want to go and buy life insurance. I mean, it's just one of those life's necessary evils. As you say, it is a cost, but the upside is just so enormous. The risks are so great. Yeah, sure, we're not selling investment return, the sexy stuff that makes people feel really good, but we're giving people peace of mind. We're giving people an ongoing relationship that's really, intimate and personal. We're considering their circumstances. We're considering their family circumstances, and we're there for them to deliver that promise in the event that something really bad happens to them. And then we hold their hand through that life event, as you just talked about, a cancer, or perhaps it was a cancer claim or a trauma payout. It's life-changing, and people say, yeah, great, it's great to get the money and we pay off the mortgage, for instance. But it's also about the experience as well. It's just knowing, someone's got my back over here and I'm not walking alone. I've got Rob behind me and his team, and they'll be there for me if something bad happens to me or my wife or my family.
The thing I like about bringing business owners on who specialise in risk is I literally just get to do a one-on-one business consultation. So thank you for your time. Appreciate it. But how do you communicate to new recruits about the complexity of advice? So my experience a lot when people are getting into advice and looking more generally, they probably underappreciate the complexity involved in insurance advice. Do you go into depth about communicating that, or you just go, well, that's a part of the learning journey. They'll get a sense of it once they're in the business and they'll learn how complex this insurance world is.
Well, mate, I learned a lot from you as well, I want to say. So the business consultancy is a two-way street. I'm learning you build your business out, which is great. So congrats to you. But in terms of bringing new people into our business, we very much talk about the complexity of insurance, the complexity of insurance advice. I mean, we have that conversation with potential referral partners and even clients to an extent as well. But for new entrants, or not even new entrants, it could be advisors coming in from other businesses into our business. We've really got to talk to them about the nuts and bolts of insurance advice and just go through an SOA for starters. I mean, we really go into a deep analysis when it comes to advice in terms of comparing different contracts, for instance, going into the definitions of the contracts to see what works and what doesn't work and what's appropriate for the client and what's not. And then, we've got all the other aspects of insurance advice like underwriting, like the advice process itself in terms of SOAs, in terms of claims as well. I mean, there's a lot to it. As we talked about before we got online here, I mean, there's a lot of complexity around product changes, compliance, the industry in general. I mean, reinsurers are pushing down on insurers now in terms of, what they're able to offer people in terms of coverage and underwriting rules. You have to be a specialist in this space to give the best possible risk advice. I think if you're not focusing on all this complexity on a daily basis, you're probably not doing the right thing by your clients, I would say.
Have you had experience in the past where you've had advisors come in and you have said to them, hey, actually, we need to take you back a step and really learn the basics of it? Or people like pre-advice and gone, well, maybe you're not as far ahead as you think because you haven't done there's a lot more complexity. How do you manage that, dealing with potential egos, dealing with people feeling like, well, I'm taking a step back career-wise? Like, how do you guys manage that?
Yeah, I mean, there's an old saying that you don't know what you don't know, and people will say to you, "Oh, I've done risk advice before, and I know what I'm talking about." And then, it's not to be arrogant or egotistical, but we've been doing this our business has been around for 27 years. Like, we've pretty much seen everything you can see in risk. There's a lot of experience, there's a lot of complexity that we will have seen and experienced and navigated that someone that might be newer to the space or not a specialist in the space may not have seen, for instance. So they don't know what they don't know. We've had a bit of a strategy in our business to not necessarily go with experienced people from other businesses and bringing them into ours. And it's not to say it's not the right experience. We've probably just not had as much success in terms of bringing experienced advisors from other businesses into our business. What we've typically done is to bring people through the career paths from new entrants, could be through the administration path, into paraplanning, into the associate space, and then into advice. And the whole point of that is to give them that mentoring, learning, training that you just talked about. So they have all that knowledge and experience to be able to navigate all that complexity. And it takes time. Like, I think most of our advisors in our business have come through paraplanning, and they've had a couple of years in paraplanning and then gone into the associate path where they've just sat in on meetings with advisors. And then once they've had the confidence, they've got the knowledge and experience, they're off on their own and they're advising.
Yeah, I was talking to Brad Gaselta in a previous episode about their process. They go through like 4 years of training before you be an advisor. Yeah, because there is the complexity, all the soft skills that you pick up when you're in meetings, and really you can learn so much without actually sitting in front of clients and talking to them about it. But like they go through a 4-year training program with their.
Yeah. I mean, Brad's a great operator. He's great in the advice space and a real advocate for claimants as well. And I'm glad that they've got that approach to things, because you can't manufacture it easily. You can't fake it. You've got to go through the learning curve of knowledge, but you've also got to go through the experience of real life scenarios. And we quite often talk about claims being the driver of advice. And what I mean by that is that, as you know, our business, we've managed a lot of claims for our clients, and we learn a lot at that point of time of claim in terms of working out what works and what doesn't work in terms of advice. Like, we know what's a good insurance contract and what's a bad insurance contract in terms of how it responds in the event of a claim. So having, through experience, trial and error, knowing what works in a claim, we just had a better, approach to advice, getting it right at the start to deliver on the promise at the end.
And so, what's your advice for advice firms? Let's pick an advice firm. They've, growing quickly, but they're in a new book of clients. They don't have the experience of that claim. What would your advice be for the director of that business? How do they manage that? Our business, we don't have a huge amount of claims on the books, but there are plenty of advisors where they're maybe generalists doing a few policies. They don't have the experience of those claims. So would you suggest that we look at, we try and gather as much claims data from the insurers to then think about that? Or do you feel like it's just, you got to have the runs on the board, deal with claims, and then, re-engineer your advice process once you learn?
Well, I'm assuming this person, director and business will stay unnamed, but if I'm talking to you, mate, I mean, you are a very curious person. You ask lots of questions about claims and whatnot. So you've got this thirst for knowledge that I think probably puts you ahead of the curve. And I would say to other advisors, I mean, you just got to experience claims. You got to learn as much as you can. You got to work out what works and what doesn't work. Of course, get some help from the insurers. I mean, they're our partners and they should be there to help us. And of course, the claims statistics and data is very, very helpful. And the insurers, I think, in my conversations with them recently, are becoming more open and willing to share the claims data nowadays. So I think that's very helpful. But I think for advice practices, there's a real sort of critical decision that needs to be made along the way. And we've talked about this. It's like, what is core business and what is not core business? Like, if you're not going to focus on risk and you're not going to focus on claims, then don't. And outsource it to people that will. It's like changing the car tire analogy. I haven't changed a car tire in 20 years probably. I know how to do it, and I'm sure if push came to shove, I could change my car tire, but I know it's going to be a bad experience when it happens. It's going to take me a long time because I'll need to Google it and work out, how do I do it again? There's always risk associated with it. I might not do it very well. The wheel might fall off, and it's just not a day-to-day business as usual task that I would do. So I would much prefer to get an expert, a mechanic, a in to do that tire change for me, right? It'd be an exponentially better experience and outcome, I think. And it's the same with advice. You talk about risk advice, and you've talked about this, mate, the 80-20 rule. You've really got to have a crack at it and do it really well. And it's the same with the claims as well. Like if you're not really focused on it, if you're not doing it well, there's a risk that you let down the claimant, and you probably should outsource it. But I'm not telling everyone to do that, because I get so much enjoyment out of helping people, in claims, and you can learn a lot. So it's just a critical decision that needs to be made along the way.
That's right. All right. So let's move on to that. In terms of AFRM, you've got your standalone financial advice business. You guys specialize in risk. And then you've got, is it AFRM claims? Like, what is the business AFRM claim?
Yeah, AFRM claims advocacy, which is actually a separate business to AFRM advice.
Yes. Yeah. And that business is set up to manage AFRM's claims as well as work with other financial advice businesses who want to outsource their claims.
Correct. So AFRM has always managed claims for our existing clients. That's just part of the service that we provide. We've been doing that for 27 years. We don't have data all the way back 27 years, because that's going back a ways. And, we've gone back as far as we possibly can. I think we've gone back something like 17 or 18 years. And our best estimate in that 17 or 18 years is that we've managed about 300 million in claims for clients. And look, we've learned a lot over the way, and we've done a great job for people. And we were just getting so much interest in what we're doing in the claim space, and people were reaching out to us all the time and saying, "Can you help me with a friend or a family member, or can you help me with my claim?" For instance, that were not clients. So we then set up the advocacy business about 6 or 7 years ago to offer the same service that we provide our own clients, but to external clients. Yeah. And so that's been going for about 6 or 7 years, and we're helping people all over the country, from industry super funds to charities to a whole bunch of different organisations, and also to the financial advice market as well. So a lot of advisors that don't want to specialise in risk will outsource their advice and their claims to us as well.
Yeah, and we've talked a lot about this. We've always been very public about this opinion of, like, if it's not your core business, get rid of it. So that's why I think. And a lot of advisors are much more keen to do that these days. That's my view of the trend, that they're much more keen to just get rid of it. If I don't do risk, if I do one policy a month or 5 a month, but 95% of my revenue somewhere else, then just focus on that. And so we're working with a business at the moment to acquire their existing clients and work with them moving forward. I talk to everyone else in the risk specialist space. Everyone's doing the same thing. Correct. Now, moving to claims advocacy. So, what's your discussion with a business like mine, who we help set up the policy, and we've never had a bad claim. Like, every claim we've submitted, it's been paid out. Hasn't actually been that difficult. We've never done a TPD. Fortunately, to date, haven't done a life policy. I mean, they're relatively easy, but fortunate because I've never had to manage that, relationship about, having a client pass away. We've had income protection, trauma, the fairly easy ones. So would your advice for advice practices who specialise in insurance or even dabble to outsource all their claims to a third-party claim service, or kind of triage it like the way I think about it? I think about, for the easy claims, we'll do it ourselves. For the more difficult ones, we will assist our clients at the very beginning in terms of understanding what the policy says and how it works, and then offer them a service to either outsource, do it yourself, or we can charge you a fee for it. And we've never charged a fee, so I'm not even sure we'd even offer that.
Oh, look, and I think it's horses for courses. Some advice practices want to do the claims in-house, and they hold their cards close to their chest, because it's such an intimate and personal process sometimes when we're dealing with an illness, for instance, with an income protection policy or a trauma cover, like you talked about. And, if you've only got a small client base, for instance, like a private wealth business that might be a couple of advisors that only have a couple hundred clients, for instance. They're pretty intimate with their clients, and so they can probably navigate it okay every now and again if it's a straightforward claim. But, there's also the difficult claims that you talked about, TPD, terminal illness claims, for instance. I mean, there can be difficult claims with income protection and trauma cover as well. But I would sort of suggest, back to the core business stuff, like TPD claims can be pretty tricky and time consuming. Like we've got some TPD claims that have taken 12 to 24 months to get paid. And, there's a lot of evidence that's required to meet that point of being able to satisfy the definition on a TPD claim of maximum medical improvement. It's a high bar to meet, to be totally and permanently disabled, unlikely to return, your own or any occupation, for instance. Like it's a high bar, and quite often the insurers, and I would say to you, and you'd probably agree with me, the insurers are probably more risk averse now than ever before. I mean, we've seen product change, we've seen lots of questions around sustainability. The reinsurers are putting a lot of pressure on insurers. So, to get TPD claims paid, it's really tricky. So definitely outsourcing TPD claims makes a lot of sense, I suppose. But there's a lot of tricky trauma and income protection and terminal illness claims as well. So, yeah, I mean, it's easy to say, we'll do the easy ones along the way. But even then, I see a lot of advisors just say, here's the forms to the client. You go direct to the insurer and just get it done. Well, that's fine. I hope they get their claim paid, but it's probably not a great experience for the client to be able to be navigating and negotiating directly with the insurer. They really need someone to hold their hand through the experience.
And so, I mean, in my conversations with advice firms about outsourcing risk, I talk a lot about how do I address their concerns with that. And a lot of the concerns that I hear is, hey, we've been selling and recommending insurance products. That's been a part of what we are and what we're about. How do we then just rip that part of our service out and give it to you, Phil? So that's always been their concerns. How do we manage that? The technicalities of modeling the premiums, we can manage that stuff, but it's around that, like the soft skills for the advisor to manage. I have lots of conversations. So bringing that back to your business and saying, hey, refer the claims out to us, which I think is a very smart business decision. That's why I've always said to clients when they ask us, what do you do with claims? I just say, look, we may need to charge a fee. We may need to outsource this because we're not experts in the claims. We set up more policies than anyone else in Australia. So I know about underwriting better than anyone else in Australia, I would say, because of the volume, but I've got no idea about claims. We've done sub 10 claims this year. So that's why I communicate to the clients at the very beginning, because we've got a fresh business, that, hey, we're going to likely outsource this if we feel like we need to. But having your conversations with advice firms who specialise in risk, and that's been a part of their value proposition, is we will be here at the time of claim. How do you manage those conversations, or what would you say to those type of businesses?
Back to the first one, you're talking about, just some maybe generalist advice practices that have been dabbling in risk, and they're saying, well, how do we now outsource it? What do we say to our clients? I don't think it's very different in terms of the conversation piece to the client segmentation process that a lot of advisors have gone through in the last few years. I mean, we know that giving advice, the cost of giving advice is expensive. And unfortunately, because of the compliance and governance regime, we can't give advice, or many advice practices can't give advice to everyone. It's just not palatable in terms of the fees that are required to give advice. So, I think there's been a general sort of theme and move and strategy around client segmentation. Like advisors, generally speaking, across the country have got smaller client bases than ever before. Like if you go back 10 years, advisors would have had hundreds of clients and they would have been able to manage them, pretty effectively. But the compliance regime is raised so high, the cost to give advice is so high that many advisors have scaled back to say, just knock back clients sometimes and say, I've got 100 clients. It's all I can sort of handle now. So I think it's a similar conversation in terms of risk. It's like, I just don't have the capacity, the time or the expertise to be able to give you advice or service you on an ongoing basis in terms of reviews and administration support and then claims. So I'd rather bring in an expert like Phil or Rob or whoever it might be to do a better job for you. And, I always say to referral partners, my job is to make you look good. It's just to come in, do a great job and make you look like a hero for bringing in an expert to do a job that they might have done in a far more mediocre way.
So I've got a few other questions, a bit of a tricky one. So now we've got an obligation to report any bad advice. How do you guys manage that? If you've seen that the advice maybe not done very well at the very beginning that's led to a poor claims outcome, that's tricky.
Yeah, well, this is the big ethical beast. This is the ethical beast that started with the Royal Commission, and obviously we've done our ethics exam and study as well.
The reason I ask the question is because advisors may be concerned. If I'm giving it to another advisor, what is appropriate advice is Pandora's box. My view is you talk to 10 advisors, you get 15 best outcomes. And every one of those advisor thinks the 9 others are mugs and they shouldn't have given that type of advice. So that's why I think as advisors, we always need to give each other the benefit of the doubt. Hey, I may not have done that, but I can understand their philosophy. Now, we can all agree there are some mugs out there for sure in every industry, but we've got to lean towards giving each other the benefit of the doubt.
Totally agree.
And I think historically and still today, we lean towards throwing each other under the bus as an industry. That's my personal view. Now we've got this added complexity of this ethical obligation to report, bad advice. How do you manage that in terms of I'm sending you a claim and then you look at the original advice and I've moved the old IP policy to the new one that, without real clear justification, how do you manage that?
This is a pretty tough question. Look, I always lean towards, like you say, giving the benefit of the doubt because you don't really know the true story or the context. I always think about having a conversation with the advisor. Like if someone's been referred to me, well, I've obviously got open lines of communication with that advisor. So first port of call would be to have a conversation with them and try and understand the circumstances. If there's an issue there, well, we need to work it through. Like I'm not one to be a dibber-dobber, so to speak. Like I know we have an obligation, but I don't see the point in just dobbing people in for the sake of dobbing people. I don't see that as a very good thing to do. If there's a clear legal issue or there's criminality, then that's a different conversation. Then, you'd be taking it to their licensee, for instance, or, you're probably talking to ASIC, for instance. But that's pretty extreme. I think you've got to be open-minded. You've got to be fair and reasonable. It's a little bit like underwriting. The way underwriters assessed applications 15 years ago was vastly different to the way it's done today. So you can't throw people under the bus for meeting the standards at that point in time, which have changed today. So I think you just need to be very careful in that regard as well.
Mate, you navigated that question well. That was a tricky one. And
thanks, mate.
And again, as you said, you're working with those advisors. You're having a conversation. Most advisors, and in fact, all good advisors, if they made a legitimate mistake and put the client in a worse position, they'll be horrified and want it sorted out. Yeah. And that's why we've all got PI. And the licensee will manage it, and we all step in and you pay your excess, and that's just the cost of doing business.
Oh, and look, the other thing is that I think advisors, we've talked about this before, for instance, talking to potential referral partners, and they sort of say, risk is too hard, I'd rather outsource it to you as a specialist, right? If you had a look at some of their advice, their risk advice, like prior to that point in time, some of it would probably be pretty poor standard compared to what we do. They're trying their best. They're probably meeting their compliance requirements, but they might not be best practice, for instance, or absolutely giving, there's many advisors out there that haven't really navigated the new income protection contracts, but at least they've put their hand up and said, I know hand on heart, I'm not doing the absolute best thing for a client here, so I'm going to outsource it to Rob or to Phil, for instance. So at least they've gone to that point to recognise it. Now, we can't go back in time and magically fix all that advice, although hopefully we can in time. But at least they've done the right thing in that regard and said, well, let's outsource to a specialist.
That's right. Yeah. And, just like if I was to give investment advice today and I go, well, okay, let's just, put my finger in the air and go, let's just pick Vanguard and core satellite portfolio. Like investment advisors may be listening going, you're an idiot. So you wouldn't do that because of A, B, and C. You wouldn't put them with this platform because that was good back when you did it, but now their fees are, non-competitive. Just like I would never give investment advice these days because I would be horrible at it. If you're not focused on it, it is hard in that space. Yeah. So now moving on to, you mentioned before that, your claims advocacy work has now informed a lot of your advice. So for all those businesses out there who aren't doing the claims, are there certain things in contracts that are like must-haves today because of your claims experience? Like, help me understand what are those must-haves in a recommendation?
I mean, there's lots, and, there's a lot of complexity in insurance contracts. And as you know, they've changed over the years. So we go back in time, say 15 years, and looked at the trauma contracts, for instance, 15 years ago. They're vastly different to what they are today because there was an arms race amongst the insurers to have the best, contracts that they gave the best features, the best ability to go on claim. And so they've evolved over the years, right? A couple of examples, in the trauma space, there was a particular contract that we would lean towards over the years that had a better prostate cancer definition of T1A, which essentially meant that it was a lower grade level of cancer and therefore potentially easier to claim on, and created more certainty of outcome for our clients in terms of, when they went and had a prostate checkup with their GP, with their doctor, if they picked up prostate cancer at that lower level, then they would be able to go on claim. And so we always sort of, where it was possible, we would recommend that contract. So I don't want to name names because I don't want to start a fight between insurers. But the latest one that we're sort of probably looking at in the world of income protection is day one partial definition in income protection contracts. And that meaning you get access to partial disability benefits from day one of a disability without the need to be totally disabled before being partially disabled, for instance. So many of the contracts now have a requirement. You've got to be totally disabled for a period of time before you can access the partial disability benefits. We see that as being very problematic in terms of being able to go on claim. Certainly some clients will be totally disabled and that's fine. They'll have no issues. But we have many clients in our business that have been on claim over a long period of time that have always been partially disabled, not totally disabled. Like, for instance, they might have had mental health, it might be musculoskeletal, they might have had a cancer diagnosis where they scaled back their work to say 1 or 2 days a week. In that instance, with many of the new contracts, they wouldn't be able to go and claim because they weren't totally disabled before being partially disabled. So, we've put the insurers on notice to sort of say, hey, we're going to struggle to recommend your contracts if you don't have day one partial. And so that's just an example of one that we've got.
That's a great example because, the old contracts with we can't sign up to those. So it's about those today factors. Like our business, we don't manage claims to the scale that you guys do. So that's what is good about your learnings from your claims business. Because the hard thing about, for me as a business owner and an advisor, going to insurers and asking about their claims data, if the insurer doesn't have day one partials, they're not going to tell me about how many claims that they wouldn't have paid out on day one partials. So we're business partners. We've got a very similar philosophy around, we want to partner with insurers and we're not combative at all. But the reality is, I'm not going to, because we charge a fee for our advice. I'm not going to say to every client, you really should go to someone else first who doesn't charge you a fee for this advice because we charge a fee. That's just commercial reality. We're not going to do that. So that's the concern with insurers giving us that claims data with that. So other than talking to really experienced claims advocates out there, what are some ways that you believe advice firms can kind of manage that claims data to influence advice?
It's really hard, mate. I agree with your comments. The insurer is always going to be biased towards what they do best. And, I've had these conversations with the insurers that don't have day one partial, and they will quite often say things like, our claims data doesn't really see this as a huge issue. It's a small percentage of clients, but we see it differently on our side of the fence. We've got quite a lot of long-term claimants that are never total before partial. So we see it differently. And your point, I think, is right. It's really hard for advice practices to navigate that. And back to my point earlier, you don't know what you don't know. Unless you've seen it yourself, which we have in our business, or you've been told about it, you would never know, right? And I guess that's the whole point about specialising in the space, referring out where you don't have the expertise. I mean, FASIA, the Code of Ethics, it demands that now. It says, if you're not an expert in the space, you should refer it out. And it's just while we refer out super advice and we refer out for mortgage advice and estate planning, for instance, we're just not experts in that space and we're not going to dabble in it. We're not going to do the wrong thing by the client. So I don't have a perfect answer to your question because I don't know how you magically fix that apart from refer out to experts like you and I. And in your instance, you might not have managed a lot of those claims yourself, but you're so curious and you're always asking me questions about this stuff. What are you seeing? What's important to you? And I think that's the nature of our, collegiate industry of risk advisors. And, before we got online, we were talking about our conversations with Brad Caselta and Ben Donald and Chris Mason and Darren Conway, et cetera, all these guys that are in, similar practices to ourselves. We all see lots of things. We have lots of experiences. We have a duty, I think, to Australians to share all this information and knowledge. And in fact, we're talking about, sort of having collective sort of groups to sort of share more and more and more so we can help more people. So I think that sort of forum of sharing, being curious, sharing. I mean, there's lots of clients out there. It's not like we have to be protective of our own IP. I mean, sure, there are some things, but there's lots of things to be shared that we can all benefit from and help others.
Yeah, that's right. And I think that's a great thing that I've always experienced in advice, even when I was a baby advisor. I've only ever had one advisor, and I know their name still. I'm not going to say it. I've only ever had one advisor who was precious about their own IP. Everyone I've ever met has been like, yeah, cool, I can send you this, or, like everyone, doesn't matter how big or how small their business is, they've always been willing to share. So, my advice for myself and anyone else who doesn't have the claims data or the claims, experience and wealth of experience to influence our advice is just ask a million questions of as many people as you can. And that's what I always try and do, because, the older I've gone, the more I realize most people are smarter than me. So I just got to try and learn, just be a sponge and learn as much as I can. So that's why, again, your point of day one partials, the insurers aren't there going, oh, let's screw over these potential claimants. They're going, let's give a priority list. What's the priority? If day one partial is going to increase our premiums by 2%, is that worth it? And that's the equation they've got to do. And that's reasonable for them to make that equation. And that's where it's reasonable for an advice firm like you to then go, hey, that's a must-have. We've seen so many of our clients who would not have had collectively, $20 million in their pockets right now because of that one feature. So it's a must-have.
Oh, look, the insurers have got a role, mate, no doubt. I mean, they've got to manage risk. It's risk and maths, and they've got to get that balance right. And just like APRA stepping in with income protection, they've got to make it sustainable moving forward. We don't want them to be cowboys. We don't want them to, sell lots of products and then pay out, exorbitant numbers of claims to somewhat non-genuine claimants, and then everybody pay for it later on with premium increases. So there's a healthy balance there. We've got a philosophy around advice and managing claims for our clients. And so that's a really, really important one for us. Back to the sharing piece, as you know, like I'm really open about sharing all this sort of information and knowledge. We were giving a talk with Risk Info earlier in the year, and I was talking openly to hundreds of advisors about all these things that I think are important, and trying to give people knowledge and experience so that they can make their own decisions around their own advice practices in terms of giving it good advice or outsourcing to experts like us.
Yeah. Mate, well, we're going to finish up. I'm going to ask you two questions, but I appreciate your time today. It's always enjoyable being able to spend some time and having a chat. Two questions I have for you is, when do you get a chance to do your emails?
Yeah, it's hard, as you know, like you've got lots of staff and I've got lots of staff here. When I'm in the office, normal office hours, I try and dedicate as much time as I can to staff and to clients. So emails, my wife will yell at me sometimes, but quite often on the breakfast table in the mornings at 7 a.m. I'll be dealing with a few emails, and quite often after hours at night. So do I get the balance right? Maybe, maybe not. But yeah, mate, there's a lot of emails to get through. So it's about juggling all those different competing interests.
I ask everyone that question. I don't think anyone's given me a good answer on how they manage it well. Everyone just rolls their eyes and say, oh, yes, okay.
I know. Well, what I will say is when it comes to emails, you can't please everyone all the time. And there's going to be some emails that slip through the cracks. I mean, it's important to be pretty organised, but it's also really important to prioritise as well. And unfortunately, there's some at the top of the pecking order and some at the bottom. So you just can't please everyone all the time.
Yeah. And what's one interesting hobby that you have?
I'm back into golf. As you know, I lived in Melbourne for 10 years and relocated the family back to Newcastle. Part of that was to get a nicer weather environment, and it certainly is that up here. It's paradise up here in Newcastle. And it's given me the opportunity to pick up the sticks again and play a little bit more golf, which I'm trying to do, and trying to be healthy and, go for a walk on a Sunday morning here and there, get some UV light and fresh air. The golf itself is pretty mediocre, I will say, which is a little bit unfortunate, but at least, I'm getting out and about and getting a bit of exercise.
Yeah, I've just started playing a bit of golf myself. My brother's getting into it, literally going 4 days a week. And I can commit to 1 weekend a month. I don't know how he does it, but so I've been trying to pay a bit. And golf,
yeah, it's addictive. It's very addictive, as your brother is probably experiencing right now. So buyer beware, mate. You could get really addicted to it.
How golf is just an infuriating sport where, doesn't matter how talented you are in sport, golf will just destroy your confidence.
Correct. It's a mental game, mate. It's a stationary white ball, but it just seems so hard to hit.
I love it. I like the mental side of it, even though I want to throw my clubs away every time I go.
No, you got to go to that Zen place, very calm, just to enjoy the moment.
Awesome. Well, next time I'm up in Newey, let's go for a round of golf.
No, I'd love to. That'd be awesome.
All right. Appreciate you taking the time out of your day today. And if anyone wants to get in touch with you, either for AFRM claims and referring business or just to get in touch.
Sure.
Otherwise, how do they do that?
Yeah, look, AFRM website, www.afrm.com.au. AFRM Claims Advocacy website as well. I mean, you can Google that. There's contact pages and whatnot and all my details. Bruno Maraca runs our advocacy business, who you know really well. So he's the guy to reach out to there if, there's some support needed with claims, difficult claims, TPD claims, whatever, we can help.
Yeah, and we've referred clients to you guys and and had a good experience. So appreciate that.
Awesome. Well, I'm glad we're doing a good job. So thanks, mate.
Yeah. All right. Thanks, mate.
Good. Thanks, Phil.
If you've enjoyed this episode and you think someone else will get value out of it, I'd love it if you could forward it on to them. And as always, we can continue the conversation in the My Risk Advisor Facebook group. All you need to do, open up Facebook and search My Risk Advisor, and I'll see you in there.